What's up? I'm Russ. This is my YouTube channel, Dapper Dividends, where we're all about thinking beyond the dividend and generating income without having to sell our stocks. Well, a little bit of news item for you here about Pembina Pipeline, ticker PBA. All that they're doing is they're going to be shifting from a monthly dividend 12 times a year to a quarterly dividend 4 times a year. And I don't really think this is anything too concerned to be about if you are a dividend investor in a Pembina Pipeline. But what I do think it is notable for is if you are dependent on those monthly dividends, because now you're only going to get those 4 times a year instead of that dividend spread out over 12 months. So you're going to have to make adjustments with Pembina Pipeline. Hey, how's it going? Here we are inside of old Pembina's news release from December 5th, coming out of Calgary, Alberta, where they declared a cash dividend for December 22nd of 0.2175 cents per share. On December 30th is when it's going to be paid if you hold the stock by December 15th. So this is coming out on the ex-dividend date. Oops. But always remember, you have to own before the ex-dividend date. You cannot buy the stock on the ex-dividend date and be qualified for that next dividend. But moving on, we see that shareholders receiving their common share dividends in United States funds. The December 2022 cash dividend is expected to be 0.1615 cents per share because of the currency exchange rate of 0.7425 cents. And here we see they're moving to quarterly dividend payments. So they intend to move from its current practice of paying monthly dividends to a quarterly common share dividend payment following the monthly December 2022 dividend. And all they're saying is quarterly dividend payments are going to be made on the last business day of March, June, September, and December to shareholders that hold on the 15th of that day. So always remember, if you want to receive the next round of Pembina Pipeline dividends, you're going to have to make sure you own the shares on December 14th, or also March 14th, June 14th, or September 14th. And that first quarterly dividend is expected to be paid in March of 2023. I really like this as I was looking through some of their documents. On a December 12th news article, they said that capital expenditures in 2023 are expected to be fully funded with cash flow from operating activities net of dividends. So that means that after they pay out the dividends, all of their capital expenditures, everything that they're going to spend on, will be funded by their cash flow, which is really cool because they're not saying that they're going to be taking on debt. And then under the prevailing market conditions and in support of future development opportunities, what they can do to expand the business, their cash flow from operating activities in excess of the dividends and capital expenditures in 2023 is expected to be directed towards debt repayment. So they're telling us loud and clear that after they spend on their capital expenditures, after they pay the dividends out, then that money left over is going to be directed towards debt repayment. So we really like to see companies paying down their debt. Alrighty, here comes PBA on Simply Safe Dividends with a dividend safety score of 80. And right off the bat, that jumps out at me. A 5.59% current dividend yield, 4% 20-year CAGR for Pembina, so that's kind of slow as you can read on the screen. 6% 5-year CAGR, and 3.6% is their latest increase, which wasn't too big. They have not missed a dividend payment in 25 years, and now this shows that there has been no dividend growth streak, so we'll see if they can start on that. And again, $1.92 per share per year. That's just going to be spread out over 4 payments instead of 12. That dividend currently at 5.59 is 3% above the 5-year average. Their forward price to distributable cash flow is 10.4 on the 5-year average, and it's currently 10.7, so it's really right there in line. And again, you can't really look at free cash flow payout ratio for pipeline companies and such, so you look at the DCF payout ratio, which is the distributable cash flow, and it's 60%, come up a little bit from 49, but again, they like to see below 70% to give Simply Safe the warm and fuzzies, so they should be able to continue paying that dividend. And there we see the $4.34 of distributable cash flow per share can pretty easily pay that $1.92. Sales growth 48%. That's pretty stout for Pembina. And their shares outstanding, 554 million currently outstanding. And their total sales up and to the right, currently at all-time highs, $11.5 billion. And I do like to see that their net debt has dropped by about 5%. And a 5.63 interest coverage ratio is very nice. Now peeking in at Seeking Alpha, by the way, they have a New Year's sale going on. Link below if you want to check it out for a year for $39, which is like 83% off, or is it 85% off? I don't remember, off their annual subscription price of $239. So click my link. You'll help this guy get a few extra bucks if you'd like to check Seeking Alpha out for one whole year. And Pembina over the last year is up 25% compared to the S&P 500, which is down 12.38%. Last 5 years, Pembina up 47.49%. S&P, though, beating it at 63. And we'll just look at the last 10 year. The S&P 500, 239%, while Pembina's at 204. And this is for total return, which is all dividends and distributions and capital gains, every kind of income that you could get from these assets. Alpha Spread's going to give us the intrinsic value, which is fairly valued, $34.41. We're currently at $34.50. For the base case, it means things are just going to keep on cruising as they're cruising right now. But if we hit a worst case scenario, which is 5 years of negative growth, they give an intrinsic value of $25, which is about 27% overvalued. And if you'd like to check out and pause the screen now, you can look at some of Pembina's competitors and see if they're undervalued for their base cases right there. And this is really cool. On Simply Safe, they have these idea lists. And they do have one for monthly payers where they have 14 companies labeled out for us. So let's sort them by good old dividend safety. And we'll see that Pembina was the top one at 80, but obviously that's changing. So here are some ideas for you that I'll just look through and read them off and pause the screen. If you want to look at these for some ideas, we've got Realty Income, Main Street Capital, which I own, Agree Realty, Shaw Communications, Riocan, ticker RIOCF, SL Green Realty, which actually just cut their dividend, Gladstone Land, ticker LAND, TransAlta Renewables, EPR Properties, Apple Hospitality REIT, SLR Investment Corporation, Stag Industrial. I really do like Stag. I'd like to see them come down a few more dollars. And Gladstone Investment, ticker GAIN. Those are some ideas for you that you could replace Pembina's monthly dividend distribution with. If you want to keep the party going, look at this little box right here next to my head. There's where I'll show you about some cheap dividend stocks that you could consider adding to your portfolio. And if you click the box right over here next to my head that's just floating here, then I will talk to you there.